Hello, everybody. This is Drew Demon, the Devil Stockbroker, and this is our professionals meeting for the 26th of June. This is just a meeting where I meet with all the professionals to discuss technical analysis and research for other tickers to prepare for the trading week coming ahead. And with that, we'll go ahead and get started. So, a lot of stuff has happened this past week. So, the Supreme Court of the United States overturned Roe versus Wade, which by itself would be bad enough, but it came out along with the investigative committee report on GameStop, and that wasn't. It was also not the only action that Roe versus Wade or was overturned. There were also multiple other uh, constitutional overturned cases, such as not holding police responsible for not reading your Miranda rights. That was also ruled on by Supreme Court. So now the police can't be sued if they don't read you your rights during an arrest. What else? We had housing data come out and a whole bunch of other terrible, awful, terrifying economic releases. So, yeah, I think to sum up the beginning of this meeting is that the world is falling apart around our ears, and there's a lot of things that make it easy to get distracted. So, where do y'all want to start? I'll leave it to you. Silence. I love it.
Yeah, there's no words, man.
Go to tickers.
Yeah,
Okay,
really
we'll go ahead and go
bad
straight into
day.
the tickers. You guys go ahead and take your take requests for whatever tickers you want to see. We can go ahead and break down some research on these. Whoops, that was my YouTube feed. I gotta go ahead and get a chat going on the side.
Can we
Also
go
on
back?
BBIG, I didn't hear about this. If you don't mind, TV. I have some, but I didn't see any. Was there? Did you do a video and I missed it on BBIG recently?
Um.
Yeah.
Okay.
Okay.
All right. We're back where I'm paused again. Um. So BBIG. Yeah, I did. I did get a position in BBIG. What happened was the short exempt data for BBIG was extremely huge. Let me go see if I can pull up some Scourge data on that. So I'll go ahead and break out Scourge channel. This is our own private Scourge channel for the mods. I'll go ahead and look at all the data since June, since the beginning of June up until today. Just give that a minute. There we go. So this is what got my attention. I thought that this was just absolutely hilarious. But so BBIG's short exempt volume was so massive that for every share that was sold that day, 1 in 11 shares, that's or roughly this ratio of 8.88 short exempt over total volume, that is almost 1 for every 11 shares that were traded that day were sold short exempt. And that's a huge, huge number, especially
Yeah.
considering how illiquid BBIG has been. Notice how little the short exempt volume had been up until this point, and then all of a sudden it jumped to
Yeah. Wow.
397,000 and then
Oh,
838,000. So
wow.
yeah, yeah, I know. I saw this like yesterday. I thought it was huge, and then and the short exempt ratio was 7.5, so that threw all of my alarm bells. But
And
then
then 13 on
immediately
top of it.
after,
Wow.
yeah, yeah, it's nuts, right? So
Yeah.
that's
I don't know if you ever seen that before in almost any
w-
stocks. You said Mullen
yeah, I
off the
was.
Fed.
So it's funny. You're like the third person to ask me. But yeah, the only other time that I saw short exempts getting this high that were reasonable, like it's possible for short exempts to become like 30% of the total trading for the day, but it usually happens in like micro penny stocks, you know, like the super, super small penny stocks
Yeah,
that are so
where a dollar
illiquid that the
chances
market maker
literally
has to provide that liquidity. But
right.
in this, which is a mid cap stock, or I guess technically BBIG is still a small cap, but in any case, even a small cap stock, this shouldn't be happening. Like
It's
this
not
doesn't make
penny. It's
sense.
a small, but it's not really a penny stock, is what you're saying. It kind of is that
Right.
next tier, right?
Right. Well, it's a penny stock in that it's trading below $5, but it's still a small cap because their market cap is above $100 million. So
Right.
small cap, but still a reasonable float that this shouldn't be necessary. Market makers should not be in this position where they need to short exempt in order to facilitate the trading, and that tells me that they're using it abusively.
Yeah, yeah, they're really liquid. That's what's
Yeah.
telling you, tremendously liquid. I'm with you.
Yeah.
Shares are hard to come. Are we at 100% on Ortex? I didn't take a look. Is big? Is BBIG 100% now?
That's an
And how
excellent
long?
that's an excellent question. I'll have to take a look. Let's go find out. So let me go break
Sorry,
out.
not trying to dominate, just trying to
No.
get a
This is all
feeling.
for you guys. This is what it's for. So let's go ahead and take a look at BBIG on Ortex and see what it say. What does it say? Speak to me, Ortex. I did reach out to Ortex support and mention that I wasn't a big fan of the UI changes. I do kind of like these little charts, but it uses up so much space. It feels unnecessary. This could be more efficient. Anyway, that's not what we're here to talk about. So the short interest is currently at it's a little over 35 million. See, now that they've changed this, I can't see where all of the float data is. Okay, so 30% of the free float is on loan, and almost 20% of the of the float is shorted. God, I'm gonna need to drink some of
And
this coffee so I can speak.
What's the utilization rate at this point?
100%. You can see it right here.
That's what I was saying. So how long? How that's? I think I said short. I meant utilization. How long has that been at 100? Do we have any idea?
That one has been at 100 for a while, man. It's been at 100 since March 8th, but it's been touching 100 since. Let me get rid of some of this fluff here. It's been touching 100 since before the original big squeeze back in August, September. The
It looks
utilization
like
never dropped out on this one.
it looks like at some point we're going to do almost by sheer. Either the stock will go to zero, or we're going to have a large squeeze at some point.
Yeah.
It's not going to stay in between.
But it's a matter of actually putting enough pressure on the market makers and the short sellers that they have to cover. And that's what big money requires. But look at the on loan. Like look at how huge this thing's grown out of control. And you also compare the age on loan. They've been like we know that they've been holding this on loan for so long. That's 63 days average age on loan. And that's with new shorts constantly coming in and driving the stock down repeatedly over and over and over. So all of these shares on loan that are continuously being borrowed at a time when the utilization is maxed out or at least like bouncing off of maxed out, they're just generating new shares. And where they're coming from doesn't make any sense because BBIG only did one dilution, right? So
Yeah.
since September, there's only been one dilution with BBIG that took place, and if it was used for shorting, then we've already maxed it out significantly. At this point, when we were at 34.6 million on loan, the utilization was at 100, and it has not dipped since. And that's the signal that really gets my attention. And notice how fast it's grown. It's more than doubled. Almost doubled.
Yeah.
I'm sorry, almost doubled. So it went from 35 to 53.5 million.
Yeah. Looks like we're waiting for a whale to come in. That's what's. As soon as that happens, it's all over.
Yeah.
That's what it seems like to me.
Yeah.
I don't know why one hasn't stepped in yet. Given there's enough there ammunition, but now this really fueled the fire, which the last couple of days is short.
I don't know, man. It's really frustrating because I know that this is happening because there's somebody on the other side of this trade that is actually. I have a feeling that this is a similar situation that we had with Biora, formerly Prague, where you have a major institution that is long on the stock, but in order to help with acquisitions or getting their stock cheaply, they short it down and
Yeah.
reduce the price. And I don't know which
Well,
one
who
it
are the
is
holders?
because they're all so big. All these funds are so huge, and they don't have to report their positions. It's a courtesy for them to do that.
So so in Viora, Erithium was doing that as a courtesy?
Yeah.
Like you
No,
showed us the other day in your research.
no,
What the
Ethereum
what
didn't disclose any short positions. They didn't disclose any short positions, and
not
that's
not no
why.
ownership, not
Oh
short
yeah,
positions, but
the
ownership.
ownership they do have to disclose, and as a part of their 13F
What's the
port.
ownership? Because you can probably tell by like the biggest owner is probably, if anybody, the one who's doing it,
Um, that's
right?
a
To be logical.
that's a good it is logical, but they're all so big, and Vanguard, BlackRock, and Susquehanna are some of the big ones that are in BBIG. Let's see, we'll do Fintel. Let's see what Fintel says. So the institutional owners for BBIG. All right, so the biggest ones are 5 Narrow Lane, Hudson Bay, formerly Mercury Funding, and Ventus Capital.
Yeah, those are not like BlackRock. Those guys, I could see where they're trying. I could see the small guys, one of those trying to manipulate it.
Mm-hmm. Yeah, that is a good point.
As opposed to,
So let's see who
I don't know
has the
which one.
big ones on their 13Fs as of the last quarter. May reports show Group 1 Trading, Bluefin Capital, Susquehanna. This was one of the big ones. Vanguard, Jane Street, and VTSMX, which is the everything index. Susquehanna again.
Of any of those four, the top holders, are any of them in there on 13F that you just showed before? Are any of those guys in there? Just curious. Then a type of credible position.
They're all huge. Like BBIG is majority owned by institutions, but they're all such big institutions. It could be any one of these guys that are shorting it down to get the stock cheaper. And what's interesting is that you have Susquehanna here, which is reporting both having calls and puts in their positions, and you don't know what their expiration or their strike is. So it's possible that they have all these puts for a nearby expiration, and they've been driving the stock down to exercise those, and then they can drive the price
Yeah,
and bid it up.
long-term calls, longer-term calls to buy.
Exactly. So we don't know. And they have so much money, like they could be buying leaps for 2024, and we wouldn't know.
Yeah.
So that's the difficulty here is we know that there's manipulation taking place with BBIG stock, and there's a good chance that the executive staff are very aware of it. But we're
Yeah.
never going to know. We're just never
No.
going to know. And this happens every day. Like BBIG is nothing special. It's not an exception to the rule. It's the norm. This is the norm.
Yeah, that's true. But you know, it's weird. I mean, you would think that some of these larger holders would start selling off their positions if they didn't think this was going to turn around. Right,
Yeah,
like Vanguard. If it's not Vanguard doing it, then they would want to sell their position. Has that been happening, or have they been holding?
they've been holding, and that's what you see here. The number of
Enigma.
shares that have changed, almost all of them have gone in the positive direction. Only the small funds, especially the ones like One Group Trading, which only has a options position. One Group Trading's options position has decayed, and I imagine that happened naturally just from expiring positions,
Yeah.
or maybe exercising. Who knows? But the 13Fs are just for those special. Are just for the special funds that are particularly large. The smaller ones have to report a 13G or a 13D are insiders. So they have access to insider information. And that's what makes them more suspicious because they know what's going on with the company.
Yeah. So 13F is if you're a certain percentage shareholder. I think it's 5% or above. I think, is that what it is?
Yeah, I think it's a 5% stake or more.
Okay, yeah.
And these guys have to report because the 13D and G, they're both insiders and they own a 10% stake. So or a nearly 10% stake. So they're reporting their via 13G.
That's interesting. Okay, I didn't know that was.
Yeah, there's
Different
different
shares.
filing requirements for depending on what your shareholding is. So since these guys are they're like teasing the 10% threshold, then they need to report with the 13G and 13D. Um, I think the 13G is separate because let's see, groups of investors with one leading, whereas 13F filings cannot. Investor may file a 13D/G reporting one value for the total shares representing all the share owners by the investor group, but then file a 13F reporting a different value for the total shares representing strictly their own ownership. This means that share ownership of 13DG filings and 13F filings are oftentimes not directly comparable, so we present them separately. That's Fintel's explanation.
How many shares are on loan?
Jesus, a metric ton. The
'Cause, I
total
mean,
shares on loan are
you could see a reverse.
53.4 million.
You could see like a reverse rug pull coming, by the institutions. Like this would be a perfect time to burn shorts.
It's true. Yeah, it is a good time to burn shorts. If they know who the shorts are, if they know who it is, then they can really.
Well, if they request their shares to come back from loan, right? It would hit. I would imagine it hit at least a percentage of them would hit the shorts. I would think.
That's entirely possible, but what I suspect is that it's mostly what I suspect is going on is it's mostly market makers that are short. So they have these shares on loan because they've been providing liquidity to the market.
Yeah, non-institution.
And if it's the market makers, then I mean the market makers are just creating shares out of thin air, which
Yeah.
I don't know how they keep getting away with this. Like if that is the case, if that's really what's happening, I don't know how they can continue to do this because
Look no further than our Supreme Court. You don't have to look too far.
Yeah, I guess you're right about that.
That's all I'll say. But anyway, it's interesting. It's hard to say. It's kind of an enigma because BBIG looks like it could be exploding. Could be squeezing.
I am very bullish on BBIG. The number of calls outstanding for BBIG is extremely bullish. I will absolutely agree with you there.
Yeah.
Let me go see if I
But
can pull
anyway,
up the Scourge data for what their live
the
options are.
The option chain. Yeah.
Yeah, because I feel like that's absolutely worth taking a look at.
Yeah.
I'll just
Well,
go ahead and post it
if
here
it
in the screen
gammas, then you could lead into a squeeze, no question. I mean, it's a powder keg at this point, so if it happens, it's probably what I think would happen.
Oh yeah, without a doubt.
Why did Phil bring up the Supreme Court?
I said TD said that he can't understand how they get away with all continually creating naked shares. And I said, look at the Supreme Court, right? It goes against like 80% public opinion. They don't care.
I've had Crunchwraps more supreme than that court.
I've heard that. I saw that meme.
What
That was fucking hilarious.
What was that?
I've had Crunchwraps more supreme than that court.
Yeah.
That was that was amazing. I absolutely loved that.
I had to say it. I had to say it for the video.
You got
that was
it in
excellent.
there. It's on there. It's immortalized.
It is. All right. So BBIG next Friday has it's got over 30,000 calls expiring between $2 and $3 strikes. So if this gets above $3, then it could trigger a gamma. It can trigger a gamma squeeze going into the next 2 weeks. I feel like our target should be closer to 3.5 because based on the pricing of BBIG, whoever bought these weeklies, and this is not likely to happen because this is the bread and butter of the market makers trying to get money out of the market by putting all these calls out of the money, and weeklies are the ones that they make the most profit on because you've got gamblers that are throwing their cash at these all the time. If I'm gonna bet on a weekly, it's gonna be like this thing might move by a couple of bucks intraday, so I'm gonna take I'm gonna take like this $5 bet and see if I can squeeze it for $100.
Yeah. Anybody could tell that it's unlikely to move by vast leaps and bounds. That's only like if you have like a really unusual macroeconomic announcement or something.
Exactly.
Where the company comes out with something out of the blue that was so revolutionary. But that's like, how often does that happen, right?
Yeah, not terribly often. And the puts are actually just as bad too. Like the puts that are currently on the table right now. This is the put float. It's not as attractive to bet on puts unless you know that either one, you have a position in long stock and you're not sure that the stock is going to continue up, you buy the puts for protection, or if you know that the company is going to go down in value, you buy the puts ahead of time so that you can go ahead and swap them out, and you can exercise them to sell shares by buying them on the open market and exercising the puts, and then you flip them for an immediate profit. Or you just turn around and sell the puts back to somebody else who wants them, but usually that's what you do. What I notice here is that most of these puts that were purchased against BBIG, even though it's not a ton of them, it's so close down to zero that your maximum upside for these puts is like, if BBIG went to zero, your max profit is $200 per contract, right?
Not a lot.
So there's not a lot of upside here. And for people to be buying these puts for all the way out here is interesting to me. It just kind of sticks out as bizarre, you know? I wonder if these were purchased back when BBIG had hit its all-time high and they bought these as leaps. But if that's the case, I don't know why they didn't exercise them or sell them back into the market, or whoever the loser was that that wrote these puts didn't buy them back to close them, unless they knew they would end up going out of the money. And that's the other possibility, is that you have a bunch of people that are buying protective puts for the long term that aren't sure about BBIG, and you have market makers and institutions that do know better that are selling puts in order to make income on them and provide themselves some liquidity, and then they take it in the other direction. So there's a lot of ways to interpret this data.
Sounds like GameStop.
Yeah.
Are we done with BBIG? I don't want to.
Yeah.
Yeah.
Everybody else needs to move on, but thanks.
Yeah, no problem. I want to make sure that everybody else has a chance to ask questions if they.
Absolutely. I'm gonna be quiet.
Yeah, because I haven't been reading the text chat.
That's okay. I got you.
Yeah, it's hard for me to keep up with the text chat. So if you guys want to ask a question,
will.
please feel free to jump in voice if you can. Chandra, can a market maker? Wait. Oh, can True Team and make a market maker cactus chair craftsmanship course?
Yeah.
I'll work on that.
We're working on that.
I will work on that. That was hilarious. Thank you. I thought it was a serious question at first. I'm like, wait a second.
That's why it was great. That was really good.
I just had to like stop. Like, wait, what?
Very good setup.
That was great.
Well, if you do scroll up a bit, I mean, I can read to you. We do have some tickers that people have tagged. Yeah.
Okay.
I'll just repost it.
Yeah, I see Yakov has a few tickers that he posted.
Yakov.
A lot of people have been talking about
BBBY.
BBBY. Okay, so Bed Bath and Beyond. Got a lot of tickers. Okay.
3 grand. Got my hand up for Boxed.
Okay. Well, Boxed I saw was the first one, so let's go ahead and take a look at this one. I've been seeing a lot of people talking about this one. I know it already started moving, so by the time I looked at it, I just was like, it looks like it's already made the move. I'm not going to get into it. Yeah, it got pummeled. Holy crap. So what was the news that actually caused Box to fall so much? That's what I'm curious about. Let me go pull up my trading view. Interesting. So the headlines are an insider bought on June the 14th, which was here. Boxed shares hit record lows. They joined the Russell 2000 index on June 27th. And a fourth quarter loss per share widens. Okay, so their earnings were really bad. Better than expected, but still really bad. They're losing money. Well, they're not losing as much as they were the previous quarter.
I just started watching a Box D, something at a Jeffrey seminar, and they are increasing their earnings quarter over quarter so far, and they already are back to making more than they were making pre-pandemic, and their growth is accelerating. But I just started it, so I don't know much more than that, and that I haven't looked further than that.
Interesting. Yeah, there's a ton of volume here. Okay, maybe I should have gotten into this. Box D is interesting now. So the joining of the Russell 2000 is by itself pretty interesting, but it's a company that's losing money, so I can see why shorts are targeting it. Like by all accounts, as far as I can tell, this is a zombie company just at a glance. But let's take a look a little bit further and look at the financials. Let's see. All right, so it's a micro float, so I got to be careful what I say here. But 35.9 million shares as part of the float. Their market cap is 150. We'll just round it to 160 million. Okay. Off the bat, I see a double bottom here. It broke down here and then tried to recover, and then it broke through for the second time, and that's when it collapsed. And that's interesting because there was no bad news between this. Like this was the worst of the bad news, and their stock dropped, but it wasn't like this. I don't see a news reason for this. Okay. So I think I'm getting a picture. So box D, short interest is climbing. I bet you the on flown is insane, or the on loan is insane. Oh yeah, that's what I thought. So on loan 4.8 million, up from 2.5 million. The short interest is only 7.65%, but that doesn't really mean much. How long have these shares been on loan? Okay, so the shorts entered their position here. Many shorts entered their position here. Whole bunch got in here. They reported here. See, the age on loan tells you a lot more about when they entered their positions. You see this drop that happens in the age on loan from May the 3rd down to May the 4th. That's how you can tell that the on loan, they either jumped ship, all the old shorts jumped ship and got out of their short positions, or a whole bunch of new shorts jumped into their positions, and they decrease the average on loan, the average days on loan when they do that. And this is also interesting. So the on loan skyrocketed from March the 14th from 250,000 all the way up to a peak of 4 million. That is interesting. However, they've got really good control over this one. I just have a feeling that this one's not done going down yet. It may not be the case. Let's go take a look and see what the short exempt data says, because the short exempt data may tell us a different story. Box D. Let's get the short exempts from FINRA. Actually, I need a longer. I need all the way back to. I need to go all the way back to the 1st of May. Okay. Let that load up. Days on loan is dropping out big time. That's just because the volume is increasing. It was 11.5 days to cover at one point. Now it's down to 1.5. if I was short on this stock, I would be getting out right now because most of the shorts that were in this thing, like that is such a massive profit. That's that's $6 on the dollar. That's a 600% profit that they made. Like, why would you not get out right now? I can't believe that I'm seeing that the age is continuously going up as the shorts are increasing. That's nuts. Let's keep going. I got the short exempts here now. So this is the box D short exempt data.
On May 31st, they filed a prospectus for a 15 million share offering on LIABLE News.
May 31st. Okay. Can you get me the dates of when that prospectus is effective and the sale goes in? Scrap Queen?
Yep, I'm looking now.
Thank you. We'll go ahead and take the time since we're on video and it came up. Scrap Queen's been promoted to analyst, and I'm so glad to have a filings detective added to the team.
Yes.
Yes, and
She is a queen. She will go into. She talked one time about having her entire dining room table full of like hard copy filings or something. Like she is.
Wow.
Yeah, she
Scrap
is a
Queen.
dog without a bone. Is that how you say it?
Scrap Queen, do you have a Fintel subscription?
I do not, unfortunately.
Okay, that's going to be our next. That's going to be our next task. So I'm going to create an account for Hell's Trading Floor analyst to share. Y'all will get access to Fintel. That's going to be our next priority.
You know, I was going to make this suggestion. Is it possible, I don't even know if it's allowable, that people could post the subscriptions that they have to magazines and things? So if someone's trying to find the full article, maybe they could add somebody and ask them to post it.
That is actually
That's
helpful.
a really good
Yeah,
idea.
that's a good idea. We have to be
We could
careful because
do-
we can't share that outside the Discord, but we might be able to do that.
No, we could do reaction roles where people could sign up with a reaction button to say what subscriptions they have.
Okay.
And so then if somebody asks them if they have, like, when seeing the role, like, I mean, we're not doing anything wrong.
Chef, since you're in here, you're familiar with Me6. Would you be able to adjust the roles for Me6 for the optional roles post?
I believe we would have to make a new section for that. But yes.
Okay, we'll figure it out.
Yeah.
Okay. So looking at box D, this cluster here of short exempts catch my attention because the short exempts over total volume is 1 out of every 10 shares being sold short exempt for 3 days in a row. That's massive. And that's pretty good volume too. So this is how they drove the price down. They literally just turned off the faucet and stopped sending orders to the exchanges. That's what this means. At least that's what it means to me. There was also a signal here of the increase in short exempts from almost nothing to immediately jumping to 11.9% short exempt ratio. And that's what causes this delta change. We call this a mirror signal. Whenever there's a massive jump in the short exempt ratio from like almost nothing to just suddenly something ridiculous, you get this type of number. And that's just showing the rate of change in the short exempt ratio. And then this is the rate of change of the rate of change. This tells us quite a lot because this shows that the market makers just suddenly turned on a switch, made a decision to kill the stock, and that ever since then it fell. Like it collapsed right here. So we used to think that this mirror signal meant that it was going to like result in a squeeze, but I think that it actually means that they're switching directions. And the market makers now decided to switch directions and they took the stock down all the way to $1.20. What was this? $1.27 at the lowest point. Fuck.
My thought My thought on this is that they bring it down knowing that dilution is coming and they want the price low so they can absorb the dilution shares at a lower value. And then they
Yep.
let the price naturally go back up and they sell us the diluted shares at a higher dollar value.
Yeah. So they soak them all up and they keep the company from getting any good value.
Yep.
Yeah.
The prospectus for that just says from time to time. So it sounds like they're just slowly getting trickled into the market as of May 9th.
Gotcha. That makes sense. The market makers obviously made a decision here. They killed the price. Like they killed the price. They turned off all buying to the exchanges. And they've been short exempting everything because they know they can get the price down. And they've pretty much succeeded. We're going to see FTDs pile up in a massive way pretty soon, though. The last reported date would have been May 31st, so all the FTDs from that date on haven't been reported yet. BoxD is a squeeze opportunity. It is. But it's really tough. It's really tough. Market makers crushed this thing. Damn. Let me do a little bit of analysis on the charts and let's see what we can do here. So they brought this thing down from, what was this? Yeah, May 17th was when they decided, right? No, it was June 2nd. June 2nd was when they did this. It started falling before then, but it didn't get really out of hand until June 2nd. So it's been falling since May 18th. June 2nd was the day that the market makers decided to turn off the buys.
Your knowledge of the short exempt data is the only thing that separates this community from everyone else out there doing stock, because no one else is talking about short exempts. That's what makes this place great.
I appreciate that. As far as I know, there's only one other individual or team, I don't know who they are, but they created a website called apparentlyexempt.com. They're the only ones that started talking about this, as far as I know, before me. And they went and created a whole website. I am so shocked that it didn't go viral because they understood it just as well as I do now. They understood exactly what short exempts mean, and they had theorized that the short exempts were being abused, but I continuously dove into the actual filings from the SEC to figure out why they would be using short exempts, and it gets worse than I thought the more I understand about how failures to deliver are created, and the fact that market makers can keep kicking the can down the road as far as having to settle those shares. It really does boggle the mind. But that's why I focus on this, because when you see these plays where there's massive short exempts, the market, it's just a sign that the market maker has basically decided, hey, we don't need to buy shares here. We don't even need to locate borrowed shares here. We can keep the price going down forever until it's worthless. And they don't expect some, group of retail traders to suddenly jump on that opportunity and then just dogpile on the stock and start bidding it up. Because when that happens, then they need to go and return those shares eventually, but they're going to have to do it at a worse price.
It's definitely the hidden secret that you found that is the key to their demise.
Yeah. And that's why, this is where, connecting in the options chain and stuff also plays a role in it. Like, they're deep in the money calls that they buy in order to bid up the price. If somebody with a few $1,000,000 had the ability to see that flow and just bought all those deep in the money calls before the market maker could get their hands on them, then they would be fucked.
Give me a few months.
What do you mean? You're going to buy all the deep in the money calls?
If there's ever an opportunity and you point a finger over there, we're going to go over there.
How much money do you have? Don't answer that.
Well, that's weird because you do put it out sometimes on Twitter, TV. I'm wondering why it doesn't sometimes get picked up.
Yeah, I do think about it. Like if I saw, like, for me, if I had that kind of money and I saw that there was this massive amount of short exempts going on in the stock, and then all of a sudden I'm getting flow alerts from unusual whales that deep in the money calls are being bid up for that same stock. And they're doing it for, like, the key to it is to set alerts on calls that have a delta value of 0.95 or higher. It's always the deep in the monies that have an extremely high delta. The closer the delta value is to 1 and the closer to expiration it is, the closer it is to the exercise price being only slightly more expensive than buying the shares out of the market. And the reason why they do this is because by purchasing the calls instead of the shares, they are collecting calls which don't have direct price action. They don't relate to the price.
There's no volume there.
Right. There's no volume there. Exactly. They're not having an effect on the NBBO because they're not actually attacking the ask like they would have to in order to make those at the market purchases. So by buying the calls, they get all of those calls swept out of the market, and they do it early, which means that people who are deep in the money but don't have the actual cash to exercise, they get such a better price that they get filled, and they're happy because they made a bigger profit through a higher extrinsic value. But the market maker is the one who really gets off on it because they've been shorting the stock down, and then they can acquire all those shares for almost the same price as the market value, but they don't cause the price to lift at all. So they exercise them immediately. They get a giant inventory of shares and they just cover the short position. But what would happen if you had a whale that noticed this and bought all those deep in the monies before the market maker could? The market maker would be out of options and they would be forced to buy at market price, and they would bid the price up, and they would be fucked.
Yeah. They have to actually buy shares instead of the
Yep,
options.
they would be forced to buy shares.
Yeah.
Exactly. And it doesn't take a lot. Like, it wouldn't take a lot. A few thousand shares of those deep in the monies with that high delta, it would force their hand. It's all it would take.
I think we need an education class for the whales.
Can we just start a hedge fund then?
Yeah, you actually account the hedge fund. That's a very good idea. You really could.
We've joked about creating Hell's Hedge Fund for this exact reason, but it's.
I mean, we should. I mean, it gives people an option, and then we could do what we discuss here.
The collective, frankly, enough for this.
Yeah, but the problem is that I don't have a Series 7, so.
Not yet.
It's probably never gonna happen. I got to be honest with you. That test is stupid.
Can we get somebody? Can we recruit somebody who does?
You let me know if you find somebody with their Series 7 that wants to manage Hell's Hedge Fund, and I'll think about it.
Let's fucking go.
Hey, I got a buddy of mine that's actually trying to push me into the test so that I can get back on the financial advisor side with him.
Oh, good.
If it actually ends up happening, I'm not saying I haven't made a decision on whether or not I actually plan on going down that route. So I got a nice cushy job with a nice cushy salary, and I get left the fuck alone.
Yeah, but you already sold your soul to us, so like think about it.
we have a standard perpetuity clause when you sign up that you must work for Hell's Hedge Fund forever.
One of the things that they told me was that they'll cover the tests and everything up front. They'll cover everything up front, and I don't have to sign anything with them, because that's one of the biggest things that I got to worry about right now is technically I'm not allowed to work for anybody else if I'm working for the company that I'm at.
Yeah.
And I'm not allowed to, like, go that route. I'm not allowed to sign anything with them. But they said that they can do the testing and pay for everything without me having to transfer. So
yeah, that is usually how they do it. That is usually how they do it. Is they have to sponsor you. You have to be sponsored by a company to even apply for the test.
But it would be like the main mission. Imagine, I mean, how far that would go, right? If you could scare the market makers out of doing this behavior, what a revolutionary thing that would be.
Oh my God, I can't even imagine. What I notice in box D is look at how the short exempt volume, that's this red line bouncing up here with the FINRA volume, and just look at what it's doing. Holy shit. The volatility in this ever since the 2nd of June is what really should tip people off that some shit is going down here. Okay, so I will strongly consider entering a position into box D. This one is a candidate. It's risky because the market makers have a lot of control here. This is a micro float, but retail does have an opportunity here where somebody with the power to buy like deep in the money leaps and purchasing just a massive amount of calls could take advantage of this situation. But the trick with the deep in the monies is that when you buy those, you have to hold on to those, preparing for those to be exercised. Like, because the market makers are going to try to
Yeah.
offer a really good price for those when they need them, and they'll get filled. They'll get filled by the thousands. So, like a lot of retailers, and this is something that we're all guilty of, is we will hold on to those deep in the monies only until they're about 100 or 200% in the money, and there's greater potential. And then what we do is we roll out to the out of the money calls, and that's where we fuck up. So that's one thing that we need to stop doing is when we get those deep in the monies, when we get in early on plays like this, we need to be buying those call options that are at the money or in the money and
Yeah.
holding them out for many, many months out, like quarterlies, like distant quarterlies or leaps, and holding on to those, knowing that the market maker is going to want them and refusing to give them to them. Because that is going to be what forces them to delta hedge. If they can
There's
just offer a better price and buy up all of those options, they'll
Yeah.
get them and they will use that to exercise those because they have the cash to do it, and they will cover their short positions with it without causing price action to reflect it. That's how they get out of this.
Yeah, it's cutting profits.
You need to
instead of
make a
taking
little
losses,
clip.
right? That's what the strategy is.
Yeah, I will clip this so that we can get a
Yeah.
so that we can get a good
Hey.
get a
Write
good grasp
down
of it.
that timestamp for a little clip so people understand that better.
Yeah.
Can someone make a clip on that Series 7 joke we were talking about? I have an idea of someone I could send that to.
That would be great. I mean, seriously, that would be like the ultimate.
The guy I
have resources that counter, and the magnitude needed to counter market makers when they pull this stuff.
Countering market makers. Okay, I got the timestamp. Thanks, Dilly. Let's go ahead and continue on. Box D does look like a candidate. It's starting to show strength, and there's good volume here. This is one of those situations where buying deep in the money, and at the money call options for distant expirations, more than 3 months, and getting a good block of shares into our inventory is what will put the most pressure on market makers. So if you want to fight a market maker that's doing this bullshit and malignantly driving the price down so that they can get a cheaper price, we can take advantage of that, get a good price ourselves, and wait for them to get backed into a corner. Because this bullshit that they're doing right here, this is stock market manipulation. And if they want to play this fucking game, then retail can pounce on them. And we need to put a stop to this bullshit. Maybe what you're saying is right, Phil. If we can catch them doing this enough times and we make them pay for it and we hammer their pocketbook and hurt them in the wallet, then they will stop doing this.
The only thing that will do it.
It is, because the only thing they care about is money.
Right.
I was gonna say I hate to be the
What
negative
are they-
Nancy on
What
that.
are they going to do then?
So,
Right. That's it, Zlever, is next, if they do get pissed off and do that, then they're gonna switch to something that we don't know about. And we're gonna have to figure that out because that's what the market is fluid. We have to keep moving.
That's the game, though. That's the whole game, guys. Every single
Yeah, but-
time we figure something out, Wall Street's doing this to itself. Like all these firms do it to each other. We know that they're doing it to each other. The trick here is that we have to be just as adaptable as the rest of the Wall Street firms, and we have to be constantly researching. That's how you win.
yeah. Well, also, it's not so easy for them to necessarily figure something else out. It gets harder and harder as options get eliminated. With enough money, you start to counter everything they do.
If the SEC won't do anything, some vigilante traders might.
That's it. Hell's vigilantes. That's what we are.
And we're not doing anything that's manipulative. We just see when the market makers are starting to put themselves in a risky position, and they're the ones that are manipulating the stock. And we're just be like, I think I'll buy it. What do you want to do about that?
That's right.
It's like,
Don't
I
freeze.
want those shares because I see you made them cheap for me. So I'm just going to go buy them and I'm going to hold them.
Why would you
And you know
not?
what?
Right.
It's like, you
It's
know
a
what? I'll
bargain.
tell you what. You took this thing down from $10 to $1. Now I want 20. How about that?
Well, yeah, and fundamentally, like in court, you could say that fundamentals justify buying at $1.
Yep.
Absolutely. They're telegraphing that they dropped it below fair market value just to screw a company so that they don't get market value out of a dilution. And obviously that's an entry point. That's not manipulative at all on our part.
Yep.
Yeah.
And you know what? That would probably introduce a new class of trading funds that will actually trade these companies fair market value for their shares if they really believe in their capability and their power to become a profitable company. I don't know if anybody else is aware of this, but the United States has more zombie companies per capita than any other nation in the world with a public exchange. We have
No, but no
more
chance.
companies that are not generating any revenue. And you know what? Most of the companies that go into the stock market do so to gain capital so that they are able to generate revenue, so that they can get at least something. And the most money that they ever make is during their IPO, every single time. That's the most they will ever get for their shares. And after that, if they run out of money, the market will take their value down to almost nothing. And those zombie companies end up dying zombie companies, not because they're bad or because they have a bad idea or their business model sucks. It's because they never had the capital, they never had the chance.
Should have stayed private.
Should have stayed private.
Yeah.
Yes, exactly. And that sucks because you know what? That's the whole point of the stock market. The equities market is meant to create investment opportunities for businesses with good models to be able to enter into the space and increase their business and make more product for their country. That's the point. The equities market exists as an investment vehicle to create a greater gross domestic product for the nation. When companies are performing well, when investments have great returns, and when the company is able to basically create itself and get funding to build something, it benefits everyone. But now we've transitioned to this debt society where we have these hunt and pick predatory hedge funds and market makers taking advantage and stealing from people. And you have executives, I hold them to a higher account as well, that are taking hundreds of millions of dollars in payouts and parachutes to just basically drive a company into the ground, and then they get $100 million bonus. This is so fucking stupid. We've dug our own grave at this point. If we don't fix this shit now, we're doomed and we deserve it.
And you know what the problem is? We stopped making things. We stopped investing in things, making things, and thinking long term. And now it's like the only thing we do is make money from money. And now we just make money by printing money on top of it.
Yeah. Yeah. The inflation and the idea of speculative investing, where you're just trying to pump the value of something until it gets a higher price and then you sell it immediately. Yeah. Making money from money is it's a fallacy. It's cyclical reasoning and it doesn't work. In the long term is it's so destructive.
You know, we stopped building a better mousetrap, right? That's what economies that win. You ever see the movie Tucker? If you haven't, go see it because that exemplifies exactly that's what happened. Tucker had an automobile that was like 30, 40 years ahead of its time. And General Motors got somebody on the board of, the company and made sure they killed it.
Yep.
So,
let me go ahead and catch up with because I know that Yakov had posted a lot of tickers, so I want to try to get to at least some of those. Let me write them down so that I don't have to keep jumping up there. Where were they? There they are.
Oh, he reposted it.
Okay. Thank you very much. Okay, so NXTP, MTEM, HLBZ, NN, and RIGL, BBBY. These are going to have to be really quick.
Yeah.
I've got 45 minutes, and then we got to get
We
to
gotta
our
get him.
analyst meeting.
Bobby. Bobby's looking real good.
Yeah, not good enough for my $10.50 calls, but there's still hope. There's still time. I got.
I mean, I'd buy shares.
Yeah,
You never know what's gonna happen.
Yeah, I've got some shares, but I figured I'd get some 1050 calls for the July 1st expiry. So you know, it's right after the earnings. We'll see what happens.
I didn't. I just saw the post from Maroon Dog that apparently exempt.com stopped updating their website last summer. That was right after AMC squeezed. Go figure. Maybe they found the same thing that I found and they bet accordingly. They're like, okay, we got our millions, we're gone, bye.
Do that shit anymore.
I wouldn't blame them. I wouldn't blame them. All right, LITQ and MSPR.
MSPR, that was a D-SPAC that shit the bed. It was the only reason I know that is because it was on it came up on the halt alerts a while ago, and it kept shitting the bed, and right after it defect.
Can we call those amber turd stocks?
Amber turd stocks. Okay, so we've got a couple of. We have a very, very long descending channel here for this stock, and it broke the channel. I would watch to see it retest it and then break above. If it re-enters the channel, well, let's see. It can't re-enter the channel. It can't. It's less than $1, or it's below 0 if it re-enters the channel. It can't re-enter the channel. Okay, so then the retest would be at 15 cent. If it retests 15 cent, then there's an opportunity here. But this company is like really, like that's just from the technicals perspective. This company actually has, they look like they're in bad shape. Let's go take a look at the financials. Float 75.5 million. Financials, they're losing money. They're hemorrhaging money actually by the tens of millions. Ugh, I don't know, man. Like that doesn't look good on its face. I'm really hesitant to suggest going into these types of stocks because they're extremely speculative, and we're not in a speculative market anymore. Like we're in a bear market. So this one, I hate to say it, but this one might have to be live and let die. Let's look at it. Yeah, I see the OBV moving. I do see that. NXTP. Let's go look at Ortex data and see what that says. So Next Play Technologies. The shorts are in big, I'm sure. Oh, they're not actually.
Hello, everyone.
Oh, hey, Verde, what's up?
How y'all doing?
Oh, you know, chilling. How's Flabbergang today?
Doing good.
You know, just another work day.
What's going on, my dude?
Yeah,
All right.
Verde, how's it going?
Did
It wasn't.
just say something.
Yeah, it wasn't Verde. It was Flabbergang. I thought it was Verde at first.
I thought. Well, I didn't get the chance to say hi to Verde, but Flab also how's it going? Flab was teaching me how to read charts,
Hi, Booker.
which I appreciate tremendously.
Oh, Dilly, how's the fever?
You know, I'm doing better.
Happy to hear.
Did you call him Hooker?
What?
She called him no booger.
I'm doing better.
Okay.
We got.
I call it booger. Yes, because Flabbergang means a booger or something. Or
I thought.
But he's also a hooker.
Yeah, everyone has a price tag.
Oh my
It's
god.
a matter of negotiation.
Hey, no shame. You do you, girl.
Yeah. And strong, independent.
We're recording this.
Yeah, this is
I'm
going
sorry.
on YouTube unedited.
I'm sorry.
It's okay. It's
I
advertisement for the
that.
professionals floor because this is the kind of fun that we have here in our downtime.
This is the kind of fun that we have. If you'd like to see us unfiltered, get in here.
We have hookers.
With boogers.
Jesus. Maybe I am going to have to edit this.
The best kind.
Good. This
It's
is
up
good.
meaning.
All right.
What's
So
wrong with booger hookers?
so for we're going to continue talking about tickers. All right. I got 40 minutes. NXTP, I'm going to have to say is that one's not for me. It's way too risky and speculative. With it being a low float penny stock, there's no catalyst. There's no like heightened short interest. There's no manipulation going on that I can see. I would stay away from it. That's like trying to catch this is trying to catch a crashing plane, not even a falling knife. This plane has had its wings clipped. There's no
Citadel Air is going down.
Yeah, I don't know if this one has any hope. If anything, this might be a bear rally from shorts getting out.
Do we have a TLDR on BBIG?
Oh, NXTP was for a quick short play because it was good, had a good earnings report.
Lol.
If that's the case, then I would consider this the move, and it's already happened. I would still not jump into it. If anything, I would expect retail to probably jump in on this, unfortunately, and if they do, I would be like, y'all are wrong. The financials for this company look awful. They really do look like they're in serious trouble. I wouldn't touch them. I'm not gonna go against them, but I don't see them surviving. I'd stay away from this one. The move's already happened. Okay, so MTEM. We'll go look at that one next. MTEM. Molecular templates. Sounds interesting. MTEM. Also massively sold short, or oof. Bad channel. Probably going below $1 in this case. The volume is interesting, though. That's a lot of Friday volume. I can see what you're saying about the OBV. Financials are not improving. It was better than expected, but not by much. Insider buy 4 days ago, so that's probably the news that pushed this. Stocks bid up after hours amid a revenue surge. Maybe there is some accumulation here. I see bullish divergence here, but you got bullish This is there's only two cases where bullish divergence repeated, which was here and here on the daily. So I would need to see a third to get confirmation. Let's see what the short interest says. 23% utilized. Short interest of the free float is currently at 4.4%. Short interest, roughly at 3.1 million. I'd have to wait on this one.
PD, one thing I'd like to mention.
Yeah.
The options for this ticker, the cheapest option, 2.5 strike at the farthest expiration is 10 cents on the ask.
It's still too far away out of the money. That's why I hesitate. See, those 2.5s are easy to keep out of the money. Like, even if this company does turn itself around, they're below listing requirements, and if they break above $1 and maintain above $1, then that's great for them. but only to keep them listed on the NASDAQ for so long. If they get put under long enough, then they'll be driven well below 50 cents. So this one I would need to see a clearer sign of recovery. This hasn't broken out of the channel the same way, and each time that it did break out of the channel, it got pushed back in really quick. So I need to wait. This one, you have to wait to see if it breaks out of the channel and stays out. It needs to stay above $2. Right now, it's you could go ahead and take that long bet if you wanted to, but it's you should expect to lose that money. It's something that you should bet only what capital you're willing to lose with like 99% certainty. This one just doesn't look like the best case. I'll double check the options just to see what the concentration is, because I saw that the put call ratio was pretty bullish. So, live options on MTEM. That's the wrong one. Inspect live MTEM. Okay. Give me 2 seconds to go and pull this data up. Okay, that's MTEM's call concentration. Yeah, see, this is super illiquid, man. There's hardly any open interest here. If you buy these, you're not going to be able to sell them. Nobody's buying them. The put call ratio is extremely bullish, but that's only out of like 200 options in existence. I can't condone any recommendation to buy this one right now. It just doesn't look like it's in a good spot for it. Yeah, I would say you really should be patient on this one. The volume is nice, the OBV is nice, the RSI bullish divergence is really nice, but the financials don't look good. The company is still losing a ton of money. The news hasn't shown any catalysts yet. I would need to see something in the filings, the 8Ks, or some fundamental news catalyst or something with their business that shows them turning around soon. So without doing a deeper dive on the DD, my initial impression is to not touch it. So I would be waiting. If y'all want to do some deeper DD on this one, absolutely go for it. Do your own research. But for this one's a no for me.
No, I love it that you keep it real.
Let's see, HLBZ. This one I already know that I'm bullish on because of Cadude's call out on this one. HLBZ Incorporated. This company is, I'm trying to remember what sector they were in. I know they're like doing transport and stuff. It is a micro float, so this one can move quickly. It's trading below $1, and what I saw was the hellish divergence on the OBV, so there's accumulation happening here. Just at a glance, I can see accumulation. That's the one thing here that I see here, despite this big downtrend, is that the accumulation is happening, and it broke out of a downward channel already. So it's been out of this channel, and it formed more of a wedge than a channel, right? So that's the difference between these and the previous two stocks, NXTP and MTEM, that I looked at, is that this one broke out of a descending wedge and consolidated, still selling off, but now it's below $1. It is at risk of delisting, so that's a risk you are taking. But the OBV is bullish, the RSI is bullish, and there is a huge amount of short interest in this one, which makes this one a little bit different. So this one is more of a case, but still a risky stock. This one is pretty risky.
Do you want to also look at Bior, because that's popping up on Twitter a lot right now?
Yeah, I can cover Bior. Yeah.
Yeah. Hey, sorry to do it real quick. Do you have like a rating system where like from risky to best plays to worst plays kind of thing, but still plays? Interesting.
I mean, I could go with like I could rate them according to the like the Standard and Poor's credit rating system if you want.
No, I mean as far as as far as what you got, what you think of good calculated risk, the best calculated risk, the second best calculated risk, that type of thing.
Yeah.
On a scale of your cat to Amber Heard, how much is this going to shit the bed?
Because that would be interesting, trying to say like what's
Sorry.
iffy, what's probable, what's highly likely,
Yeah, I got you. So with HLBZ, let me do a quick analysis on it, and I'll give you like a 1 out of 10 risk reward ratio or something like that. All right. So HLBZ, it briefly ended up on the threshold list. The security lending volume is spiking up, which tells me that there's a whole bunch of shares being loaned out. This is a sign that tells me I need to look at the short exempt data. So that's going to be the next thing. If somebody wants to post a short exempt data in the ScourgeBot spam for me for HLBZ, that would help me out. Any of the professionals or analysts. Utilization has been maxing out in the past, and then all of a sudden it dropped below down into the 60s and 70s. So I would expect utilization to max out again very soon with how quickly this the on loans have spiked. What's also interesting is that their float is, what was their float? It was like 7 million, 8 million, 8 million shares, share float. And that's just according to TradingView. Thank you, Flabbergang.
No option.
No options. That's another thing. So the market makers don't have any choice for adding liquidity to this. They need to buy shares out of the market if they want to get them back. This also makes it easier for retail to make a decision because retail doesn't get to just go and say, oh, I'll just buy options instead of shares and I'll take the risk so that I can get the leverage. Nope, don't get that option. If you want to play this one, you got to buy shares. So that helps drive the price as well as puts pressure on the market maker directly. I admit that I do buy options more often than I should, but I'm learning. And what I must say is that buying shares is the smarter way to go because one, you are not dealing with the risk of expiration and your play going totally worthless unless the stock goes to zero. So you will always have some equity value to pull back out of this. You have an unlimited time to get it, at least up until the point of delisting, which you'll know that is coming. And you are also putting direct pressure on the market to lift the price by purchasing those shares. So you're benefiting everybody by doing so. Okay, let's go pick this apart. So HLBZ, which Cadude or DM Calls pointed this one out to me, and he pointed out the amount of buying pressure and the volume was in favor of the bulls, and there was multiple divergences on the RSI. Financially, the company was in better shape than it had been in the past, and I noticed that the short exempts were starting to spike on this one about a week ago. The 4.6 is what got my attention. Now looking back at this for the first time since then, I see an 8.1% short exempt ratio followed by a 4. That's significant. So the price has been hovering around a median value of, I'd say, like 82 cents. So that is an opportunity. There's very few shares here in this particular stock. So if people start to bid up the price by buying up shares here, then they can put the market maker underwater. And there's a lot of short exempts here that they are now failing to deliver on. This is going to put some pressure on them.
Take a look, I just posted that whatever the low float is, that the insiders just bought back like 4 million shares.
Wow, that's impressive. Okay, so float's been reduced by 4 million. That's good. So that reduces, that cuts the float in half. That cuts the float in half. You have these there's a little bit over 100 and what's this? Just some rough head math. It's like I'd say like 190,000 shares short exempt just in the last 2 weeks. So that's a good amount. It makes up about after the 4 million buyback, this puts this at market makers are under, let's see, 200 over 4,000. 240. That's 8% of the float. So the market makers have short exempted 8% of the float in the last 2 weeks. That's over leveraging. Now, if this thing starts to lift and the price gets up there by about like $2, market makers will have to pay that back $3 per dollar that they spent to get this thing back. That they actually backed themselves into a corner here. So I wasn't talking about HLBZ because I didn't want to influence it with it being a micro float. I mean, this is a really small micro float, but HLBZ, the market makers are backing themselves up into a corner here. So this could actually this could blow up in their faces. This is cheap too. Like it really is so cheap.
Let's see. They received a notice on August 20th that they are under $1. So how long until they have to do something about that? Let's see. So
They received notice August 20th.
yeah.
Usually,
that's a long
Are
time.
you talking about they have to get above $1? That's usually like a year, I think they have.
How is that possible? They've only been under $1 since May. Did they do a reverse split? I don't see one.
Let's see. 8K. August 16, 2021. Am I looking at the right one? Just a second.
HLBZ.
HLBZ.
Yeah, you said 2021, not 2022.
Yeah, 2021. Okay, so they got over $1 by then. Let's see if they have another one since then. I don't see one.
They've only fallen below. They've only just fallen below 16 days ago. So they're only just now qualifying for delisting as of 6 days ago. So
That's
that gives them more than a year to get compliant. And that's only up until when NASDAQ sends them their notice. So NASDAQ hasn't sent their notice yet. I would wait for that notice to come because it's going to come like rather soon. But I see the OBV is diverging. This volume is huge. Let the shorts hit this one. They're continuously piling in, and I would slowly be rolling into a position over time. I'll be looking for liquidity areas on this one to see where they might drive it to. Because they're barcoding this thing down pretty badly. You know what? Okay, yeah. They're barcoding this thing pretty badly. I don't think they're going to be able to get it much lower. Now that I'm looking at this on the 15-minute, I don't think they're going to be able to get this thing much lower. It's going to be hard for them. They'll keep trying, but we could probably start bidding this. I would start setting a bid at 70 cents. Let them hit these because they're touching them pre-market. Limit orders for 70 cents, and I bet those get filled. Just my 2 cents. You don't have to listen to me. Like, that's not financial advice, of course. But I think that they will probably try to hit this down and take and bid down to 70 cents to get fills. And if we're sitting there waiting with alerts, we can do market ask price at 70 cents and they won't be ready for it.
What do you think about the prospectus they filed on Friday?
I didn't see it, so I'll have to go ahead and take a look at it, but let's go see.
There's a screen grab of it up a few comments.
Oh, thanks, Todd. So HLBZ Inc. 12 million shares of common stock, warrants exercisable to Class A common stock, issuable upon exercise of the warrant. So 2.1 million shares are exercisable as warrants. Offer and sale by selling shareholders. Oh, this is a passive investment by holding shareholders. So this isn't the company that's doing this dilution. This is somebody that's inside that bought these warrants. This is the same situation as with Mullen in that you had a company kind of like Asusa that had a passive investment in the company, and they're diluting from HLBZ's stock because they own the rights to those shares and warrants, and they're putting those up on offer on the open market. Okay. So let's see. Let's take a look at HLBZ and see who their institutional holders are. Okay, institutional ownership on HLBZ.
And let's see how it compares with ScourgeBot's. Flash and
I would actually like to see that. That would be cool. Go ahead and hit that in the professionals floor if you wouldn't mind there, dude.
Done. I'm super interested in seeing this.
Could you post it in the professionals floor though? Because I'm having a hard time jumping around all these screens.
Yeah.
Thanks, dude. Okay. So the institutional holders, oh, they don't have many shares at all. Wolverine Asset Management, Walleye Trading. I see Walleye Capital, Bluefin Capital. Well, they really like their fish, don't they? Hudson Bay. Oh,
There it is.
there it is. Hudson
There it
fucking
is.
Bay. Yeah, Hudson Bay reduced their capital by 13%, or their shareholding by 13%. Okay. I'd be suspicious of Hudson Bay, but Walleye, Bluefin, and Walleye Trading, Walleye Capital, Walleye Trading, and Bluefin Capital, just because they're all fish, I'm suspecting that they're probably the same owners. Just my thoughts.
Also, something to watch for on Hudson. A lot of the times, whenever they release a lot of their shares that they currently own, it's because they're expecting to get more soon. So they're one of those people that usually dances around that 10%, that 9.99 blocker on companies, and right before something happens, they have to dump their shares so that they can get more of them.
Mm-hmm. But not if we get them first. Ha!
If they're the finance, are they the financer in this? I think that's when the 9.9% kicks in. You're not allowed to be the financer and own over a certain percentage.
Yeah, because you're a dilution risk, and that's a breach of fiduciary duty on the part of the company. So they have to write that in. But if you hold multiple companies, you're allowed to sell your shares to another holding company that you own or control, and it doesn't count towards your majority shareholding. So if Walleye Capital owns Walleye Trading can buy those shares from Walleye Capital, and they're still considered two disregarded entities that are separate from each other. So even though they're both controlled and maintained by the same executives, they're still two separate companies, and each can own a 9.99% stake. That's the same thing that happened to Mullen. Asusa was selling to all of the other subsidiary companies that it was in bed with, and almost all of them were under the control of Todd Milton Alt from Alt Global Holdings.
Fuck that guy.
Yes. Thank you. My thoughts exactly.
Yeah.
That whale gif is amazing, by the way.
Well, someone was saying that all like whales equal fish names, and I'm like, well, or they're trying to like suck up all the fish that come investing.
They all live in Hudson Bay.
Yeah, they all live in Hudson Bay.
Wow. There you
Oh
go.
my.
So they're all
There
the
we
same.
go.
It's all Hudson. It's all Hudson. HBLZ or HLBZ is all Hudson.
Listen, if you are Hudson Bay, we figured you out.
Fuck
we
you, Hudson
are
Bay.
onto your shit.
I was just searching for a link between the companies and I hadn't found it yet.
Fuck Hudson Bay.
Fish and Bay.
Okay,
You can go
so
sleep with the fish.
walleye, bluefin. I'd also be suspicious of caption management. Figure out where they are. But walleye, bluefin, Hudson Bay, walleye trading, and Wolverine Asset Management are all suspicious. Jeffries Group is their own company. I don't think they're attached to Hudson Bay, but they might be. I don't know. That tells me everything that I need to know.
What about remember Nancy Pelosi's son was like invested in one of them? Is he attached to any of those fish organizations?
That's a good question. I actually don't know. I do know that he was involved in the Mullen dilution, and he's also buying BitNile, which is hilarious.
I know.
Next, we're going to go after Nancy Pelosi's family because I have to be careful. I shouldn't have said that. But Nancy Pelosi's family are investing in some really sketchy companies, and yeah, I'm suspicious.
Wasn't he also purchasing Borks?
Yeah.
That's it. Borks. Borks was the other one. That was it. That was also invested by Todd Alt, but it wasn't BitNile. It was Borks.
RIP.
Borks has earnings
tomorrow. You can get borked.
They got reverse split. Fell 20% aftermarket.
Okay, smell my finger. You're not allowed to have anything you share in the Discord put on film. You're I can't put that. I can't put that on record.
Hudson Bay's polluted. Nancy has. Oh, okay. Now I get it.
yeah. Just don't say it.
It's all right. If you want to know what we're talking about, you guys can link up with us.
Yeah. All right. Let's go ahead and let's go rip through the rest of these really quickly. I can't do a deep dive on all of these like I was doing before. Okay, NN, which is NextNav, that one's also in a channel that seems to be broken, just at a glance. What's the liquidity look like? Okay, so it's just bounced off of it for the first time. It hasn't spent a lot of time at this price. Ooh, it's kind of a broadening wedge.
What's going on with the OBV?
Yeah, this is an expanding downward megaphone. So this one actually could be... This one could be a better play. At OBV, yeah, that is interesting. Two bullish divergences. It looks like it's going to make a third here. This is going to be a third. If the price closes down below $2.08, it'll create a third bullish divergence. That's a signal. Interesting. Wow, you guys are picking some good ones. Okay. All right, so the technicals look good. What do the financials say? They got a float of 16
with the volume.
Million. Yeah, I don't.
Those volume bars, I can't see that.
That looks like yeah, that's a volume bar. It's 5.3 million.
That's the OBV spike. There we go.
Yeah, Flab, can you get me an average daily traded volume on this one for the last 30 days?
Yeah, NN.
Yeah, NN. That's it. Shares shares float is 16.6 million. Their earnings actually not bad. They went positive. They're almost break even. Oh, they surprised. They surprised and went positive. They did go positive. Wow, that's nice. That's really good. All right, so they had a really bad previous 2 quarters in Q3 and Q4. Annually, they're still losing money. Oh, wow.
What period average do you want on that?
Give me a 30-day period average.
30-day. Okay, 30-day. So 24th. What's this? 1.5 million-ish.
1.5 million on 30-day. What is it for the 15-day?
15-day. Bless someone, I think. Let's see. 15-day. It is 1.7 million-ish.
Okay. So it's leaning towards the latest.
Yeah.
I think before, can you do it for dates prior to June 23rd, a 30-day moving average on volume from before ending on June 23rd?
Yeah, just a second. June 22nd. Okay.
NN Insiders just bought 9 million shares, paid $3.85. Wow.
1.2.
1.2. Okay. That's more like it.
Okay, let me just get a full history, just a second. Okay, so on the 24th, it rose to 1.5. 23rd, 1.23. On the 21st, 1.19, 1.15. Yeah, it's
That's
Oh
interesting.
wow.
That is
It's
interesting.
been rising steadily. Like on the 1st of June, it's 750,000 a day.
There's
Oh
no
wow.
options on this one.
Oh holy shit! What happened here? May 18th, 200,000. So was there another spike here on the 19th of May?
It was
maybe?
a big red candle. They sold.
Oh, yeah. I'm not looking at the chart. I'm just looking at the average. I should add this to ScourgeBot.
Do schedule, yeah. Do schedule DD on this one and figure out how to track these signals, Flab. The moving averages and the volume spikes that break those averages by a ratio of 5 to 1 is a big signal.
Okay. To do. Breaking daily.
It had a short exempt ratio of 72 about 2 weeks back.
What?
Wow. Wow. That's nuts. 72% short exempt?
We have no shares, lol.
Wow, this thing is remarkably illiquid. Holy shit. Oh, there was a 14-day EMA cross over the 48. I gotta pull
What's the float size on this one?
Float size is, let's see, they bought back 9 million shares and their float previously was 16.6 million. So they reduced it down to 7.5 million shares.
Is it possible the volume spikes we're seeing are the market makers just correcting their short exempts because it's so illiquid?
Maybe. I don't know. Let's go pull up some of this shit. Let's go look at this data. I want to see this.
Here's something to edit off YouTube. HTF can squeeze this on its own.
Well, why'd you say it? We didn't have to say that. You just want to create work for me? You know what? If I get arrested, it's your fault. I'm not editing it out.
Dude,
Can't touch me. I'm outside the US.
I'm not editing this. It's too much work. I don't have an editor anymore. So you either find me an editor or I'm going to jail. I'm just kidding. We'll probably
since
be fine.
this is not being edited, we'll probably be fine. And if not, I'm outside the US. Can't catch me.
LOL.
Does anybody have Booger's muzzle?
Somebody just mute him. That you have his muzzle, Dilly.
Hey, saying we could doesn't mean we should. They're two completely different things.
No.
The one's just talking about size.
Yeah, and then short exempt is that's a scary amount.
It's just
this thing's
not
totally
liquid.
This one's totally illiquid. We got a mirror signal here. This one would have been a mirror signal if there had been any short exempts before. Going from 0 to anything creates an infinity percentage. I want to fix this, by the way, Flab. I don't want to have infinity, so can you round it up to can you round up 0 to 1 so that this is always so that it's always at least short exempt of 1, at least for the delta, because I don't want this infinite division error.
So the short exempt volume should always be at least 1.
Yeah, or at least if do a check that if short exempt volume is 0, add 1.
Okay, let me write
At
this
least
down.
just for the delta rate conversion, because I don't want this infinity error. It creates a divide by zero error, and that's throwing this off, and it's not telling us when there are more obvious mirrors. Like, see this one, this short exempt ratio was 0.0042, and that would have produced a mirror, and it's because who's hot micing? Someone's hot micing.
It ain't me, but to interject, are you sure you want to push it all the way up to 1 as opposed to maybe like 0.25 or something like that? Because there are days that are in the 0.0 or the 0.1 range.
No, there will only the lowest that there can ever be in short exempt volume is either 0 or 1. There's always
Yeah,
one share. It's not like a micro share.
It's a short exempt volume. It's an integer. He's not talking about the ratio.
I thought you meant the ratio. My bad.
Yeah, it'll affect the ratio if that's the case. You can just add that division and affect the formula, Flab. That way we're not getting this divide by zero error, and we can fix this. Okay.
We have 4 minutes.
Yeah, we have 4 minutes, and then we gotta go. But I do like NN. I'm gonna go ahead and give this one an up. Float reduced to 7 million, and short exempts are insane. All right, I'm not gonna be able to get to all of your tickers, Jakob. So sorry about that. Also, this EMA cross of the 13 and 45. I'm sorry, this is the MACD cross down here. So I'd be looking for another MACD cross down and above before the next buy signal. And that's it for NN. But I've got that one on my watch list now, so thank you. Okay, BBBY, and then we got to go.
Bed Bath & Beyond, guys.
All right.
Great time to buy some shares. Ooh, looking pretty.
All right.
Ooh.
So
it's one of the.
All right.
Sorry.
Exponential moving average is currently down and pretty wide apart right now. So the exponential moving averages are pretty distant from each other. OBV is creating hellish divergence, which I really like. I love that signal.
Mm-hmm.
Hellish divergence, always nice. All right, BBBY. Yeah, this is a healthy looking chart. The OBV is just constantly moving up, even as the price is going down. I like this.
The reason I bring this up, I've seen a lot of people that I really respect their analyst opinion on Twitter talking about this more and more. Every day they're updating along with certain other stocks like GameStop.
Earnings for last quarter were pretty bad. That was a lot of lost revenue, but all the retailers got hurt by this. That's my one. Yeah, my one concern with BBBY is that retail is going to get hurt. I mean, retail industry, like the merchandising, is going to be hurt pretty badly with inflation coming. So keep the broader market in mind and understand that inflation is hurting all of these stocks really badly. Everything that's in retail sales is going to get punished pretty bad. So Ryan Cohen's new model could be helpful. Going to e-commerce, that can help.
They have he has 3 seats on their board.
Okay. Yeah, it's as much as everybody likes Ryan Cohen, I also have to recognize like there's broader market problems going on that's going to make things difficult. Like Bed Bath & Beyond has an uphill battle. They're already in a situation with losing money to begin with, and going into a hyperinflationary environment. We're not quite there yet, but still high inflation above 8%. That's really bad for these retail companies. So it is going to make things difficult for them to get better earnings because people are going to start tightening up their budgets, and luxury goods, like Bed Bath & Beyond products are not going to be the top thing on people's lists of shit to buy. So we do have to be careful.
True. Yeah.
But I do recognize
they bought back like the business itself. They had that share buyback like a while ago, and then the OBV has been going up, and they've been getting some really interesting volume spikes every day.
That is good. That is encouraging. Like technical perspective, this stock has really good technicals. I like it. It's bouncing off of the bottom of a channel, that's positive. It's got these volume spikes here, constant accumulation. It looks really good for a lot of reasons from a technical perspective, but I just say be careful, because if the stock doesn't have if the underlying company doesn't have a way to quickly become profitable, then the market conditions are going to continuously hurt its earnings potential. So that's something that we have to be aware of. So I'm not just going to, dive head first into this one. I just want people
Yeah,
to
I was
recognize the inflation problems.
Yeah, I was telling people when I was talking about it in Hell's Trading Floor, I was saying that it's a good time to buy shares.
Yeah, it's low priced.
Not like
It's low priced.
yeah.
It could go lower, I think maybe to $5. But in the short term, it looks like it's about to bounce. So people looking for a scalp maybe could get something out of this. It seems to want to bounce between these channels, but just just be careful. Because I think that in the long term, this one can keep going down until we get past the inflation problem, and that could be years ongoing.
I think it's transitory.
It's all transitory, and Ryan Cohen still has his $80 calls for January.
He's a good CEO. Like he really does know what he's doing, and he is great at converting these brick and mortar companies to. He's good at converting brick and mortar companies to e-commerce, which is absolutely going to help them. It's just a matter of
join together,
right? But I mean, it's just a matter of if Bed Bath and Beyond and the other retail brick and mortar companies can make that conversion and get profitable. That's going to be what pushes their value. Meme stock or not, there's got to be something. We have to have something going for it, and the inflation problem is hanging over everything right now. Even AMC, it's a problem for AMC. But I have a lot of faith. I have a lot of faith in the entertainment industry, especially cheap entertainment, which is why I'm a bit more bullish with AMC than I am for some of the other retail stores. I'll keep looking at this.
Thank you.
Yeah, no problem.
I would keep looking at it. I just have noticed there was a lot of Reddit drama, and I don't like any of that, so I don't really care. But I've been on Twitter a lot lately, and so it seems like a lot of the super stock, like respected people, have kind of transitioned to posting over on Twitter, where they can control their narrative a little bit more. At least that's what I would assume is the reason. And a lot of them have been just doing daily updates about BBBY, which I didn't see before. So I think that's just something worth noting that isn't worth, it's not technically, an indicator of anything other than people are showing more interest. But they do have followings of their own, and I think that's worth noting, that they're branching outside of Reddit, and they are well respected.
Right. Okay. Well, I will keep watching BBBY, and I'm going to set some alerts on some various price action and signals. I'd be watching I'll be carefully watching things like the 20 EMA to cross the 50, and for continuous RSI bullish divergence. And if the OBV spikes again, it's going to get my attention. So I'll keep a close eye on this one. Earnings coming up could be a really good thing for this company. If they surprise big time, then that could be the life added to their stock. But
and then the chart I was showing Occam's was that weekly chart of BBBY of there was I can't remember what type of candles he was saying, but
okay,
you commented in that channel about it.
Yeah, I will. Oh, the big hammer candles. Yes.
Yeah.
Yeah, the giant spikes. I will come back and look at this one and maybe do some separate diligence on this one, just to see what we've got on our hands. But that's going to be
diligence.
Okay. All right, that's gonna be it for this meeting. I'm sorry I wasn't able to get to all of the tickers that people listed, but hopefully we'll be able to go and review this later in the week. Go ahead and continue to make use of the analysts, especially the newest and latest and greatest analyst, Scrap Queen. I'm looking forward to seeing what she brings to the table.
TD, real quick, I don't do it, but can you do like a video on the report, on the congressional report, the GameStop?
That got published. That got published this morning.
Oh, I didn't see. Sorry.
Yeah, that's all right. Yeah, I published that this morning. I've got an edit coming. To that soon because I mistook a name for one of the representatives that I have to fix, but that will be published today. Okay.
Thanks.
Yeah, no problem. All right, I gotta go, guys. We got an analyst meeting here in like 6 minutes ago, so that'll be it for me. Thank you all so much for tuning in for the professionals meeting. I'll look forward to seeing you guys next week. Have a hell of a time in the markets.
Thank you very much. Thank you. Thank you very much.
You too, TD. Thanks for running it.